All right, we're now live. Excuse me. It's about 10 minutes after 3 p.m. Eastern Standard Time. Today is Monday, January the 7th, 2019 already. Happy New Year to everybody. Hopefully everyone had wonderful week, wonderful holidays, and spending it with friends and family, yada, 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 all that good stuff. And today, this is the first full week of the new year. Back to the grind. And that's what we're about to do here. So I figured I'd just talk to everybody, see how everyone's doing, answer questions, things like that. I know there are a lot of questions, I'm sure. The main question being, what in the world is happening with all this extreme volatility? You know, the Dow is up 1,000 points today, down 1,000 points tomorrow. What's up? Well, there are a lot of factors. We've talked about from time to time how sometimes the markets become news driven, especially where there's a lot of macroeconomic news for the market to digest. Of late, we've been dealing with all types of trade war issues, specifically with China. We've been dealing with earnings. We've been dealing with energy prices, seasonal tendencies, supply demand issues, just a lot of things to digest. Right now, the government shut down partially. They're not going to let it go completely shut down. The government is funded until February, and you can believe that when it comes down to the wire, they're not going to leave the government unfunded, because that would lead to absolute pandemonium and chaos for many reasons. One of those reasons being the federal government uses a lot of their resources to do a lot of clandestine operations that the public and the people are unaware of. Without funding, you can't pay people. If you can't pay people, then underhanded deals, backdoor deals can't get done. All right, you need that payola to make things work. So they wouldn't be funded. And you know what happens to the morale of soldiers when they're not getting their checks and they can't take care of their families. So just a lot of issues that will come. But another issue that people don't like to talk about is how, at the end of the day, the federal government is broke anyway. The federal government doesn't create money. All right, so all they do is spend money, but they don't create money. All right, states, however, do have the ability to create money. So what happens is the states give the money to the federal government, then the federal government gives them a piece of whatever the states gave the federal government back to them. All right, so it's really a weird setup. Doesn't make a lot of sense, but we're there. This is where we are. We're at a crossroads. We have different factions fighting for power. Unlike a third world country, I mean, it's no difference. We have people fighting for power. The individuals that lost the election are still sore about it. And it's not that they just lost the election. They're losing control of the other aspects of the economy and the society. And they don't want that. So that's why they're still fighting against the Trump White House. And they're trying to get him up out of there by any means necessary. So that has a lot of effects on the market too. There's just so many different things at play here that it's impossible to put your finger really just on one thing, because there's so many other issues that are happening. Now, I know that the extreme moves happened during the holidays. That's not uncustomary. We've seen these kind of things happen before. But now, because this is the first real week of business, the new year, a lot of what happened over the holidays will be erased. It's just how things go. Now we're in January, so the January effect, people are concerned if that will take place or not. Just like in December, everyone was looking forward to a Christmas Santa Claus rally. Didn't happen. And now they're afraid of the January effect. How much further down will the markets go? Yada, yada, yada. All right, so for the most part, you don't have to watch like 20 different TV channels and all that to get a gist of what's going on. All you need to do is follow the price action. Now, you've heard me say before that the equities are better priced than the futures, okay? Sometimes the futures will have extreme moves in one direction or the other. Meanwhile, the equities will stay pretty smooth. So the equity is therefore a little bit better priced. So if you really want to take a look at what the Dow is doing or might do, you're probably going to want to look at the diamonds, which is ticker DIA. That'll give you a better understanding of what's going on with the Dow. For the NASDAQ 100, you want to use the QQQ. For the E-mini S&P 500, you want to use the SPY. And for the Russell, you want to use the IWM. Those tickers are very, very well priced. You can see the true support and resistance in the markets. There have been many times where the Russell futures will hit a new low and the IWM will not. And you need to take note of that, okay? Because something like that will tell you, where the bottom is or if we've hit a bottom. Likewise, when you're looking at topping situations, it's the same thing. If you want to get a better understanding of what gold is doing, look at the GLD. If you want to get a better understanding of what silver is doing, look at the SLV. If you really want to get a better understanding of what's going on in the crude oil market, that one you have several different tickers at play. You have the OIH, which is supposed to really track the crude oil futures. And you also have USO, all right, for the United States market. Then you have UCO, which is supposed to move like USO, but supposed to trend a little bit better and move a little bit smoother, supposedly. And then you have DIG, which is DIG, and then you have the inverse, which is the DUG, the DUG. You also have another popular market, which is XOP. X is an X-ray, O is an Oscar, P is in Paul, and then of course XLE, that's X-ray and Lima Echo. And those are the main tickers for the oil and energy sector. If you want to know what's really going on, because the crude oil futures, like I say, like other futures, tends to move in extremes, and that can blur the lines of support and resistance at times. So you're better looking at that. As far as natural gas, you want to watch the UNG, all right? And the inverse is the DGAZ, DGAZ, and the leveraged UNG would be the UGAZ, the UGAZ. All right, so that's how the markets are cut up. All right, now, excuse me, there have been some changes over the few years as far as following some of the other commodities. You're looking at your ag, okay? On the agricultural side, they do have tickers as well for some of the particulars. Like if you want to focus on soybeans or corn, there's an ETF for that. There's a corn ETF, which is corn. The soybeans is soy, B as in boy. And then for coffee, we used to have Joe at one time, but now Joe has been, discarded. And there's another ticker. I don't recall the name of that one off the hand, but it is on the In Play tab. It will be on the In Play tab. That's where you'll find that. Just type in coffee and it'll come up. And then there's a few others too, and most of those are in the in play tab, like I said. So you'll be able to find those there. All right, so this is the time that people are looking at commodities, starting to position themselves on the long side in the grains. So you can take a look at that. Also, there's been all this different talk about, the bond market and things of that nature, and the bond futures, because it's a futures product, tends to move in extremes. So the best way to really track that will be ticker TLT and the inverse TBT. There's some other ones too, like I think it's TYO, something like that. Those are also in the in-play tab as well, I believe. But for the most part, that's where you are. Those tickers really track and let you know what's really going on in the market. So if you see the Dow futures looks like it's hitting a new low, but the DIA is not following suit, that may tell you that the low is in, and you may want to take a look at that. All right, so just wanted to throw those things out there, those things that will help you to understand where the markets may be headed or what they really are doing. If you try to use the leveraged ETFs to track, you're going to be messed up too, because those leverage, once you start adding leverage, you start getting the extreme moves beyond where the support and resistance should be. Another thing I want to put out there too, for those of you that like to do the pre-markets or extended hours trading on the equity side, just keep in mind, remember, you can't use all the different order types. The only order type that is accepted for entry and exit is limit orders. So that's the only way you can do it. Now, I have not used a lot of the different mechanisms in the Thinkorswim trading platform. I'm just a straightforward guy. Mostly I just trade futures outright or, straight equities. Don't really do too much in options. From time to time, I will when an opportunity presents itself. But for the most part, I like straight equities, straight futures. But there's a way in the Thinkorswim platform where you can get around those order type limitations. For example, if you wanted to trade the Bitcoin futures contract, that contract moves like the extended hours equities. It only takes limit orders, no stops, no market orders, just limit orders. So unless you're prepared to sit in front of your screen all day or all night, it's going to be pretty much impossible for you to swing trade or position trade a market like that. But thanks to good old Thinkorswim, Thinkorswim has mechanics within its trading platform that will allow special consideration order types. All right, so you can use alerts that will execute positions for you. For instance, for your options guys, let's say today the pulse waves are saying you need to buy the diamonds, which is the Dow futures ETF DIA. And let's say today, coming into today, the system said you need to buy it at 235 even. All right, but you don't trade equities straight out. You like to use options. So if the market hits 235, you would like to be involved. You would like to be long some calls. And let's say you wanted to be long the 235 call. All right, and let's say at the time the market opens at like 230 or something like that. All right, so you don't have time to sit in front of the computer. That's not what you do. You want to be able to go in and put this order in. All right, so what you do, you can use a conditional order. You can tell the system, hey, look, I want to buy, XYZ call if the diamonds, hits 235. I want you to go ahead and work me a price on that option, thus and so. You can work a limit, or you can tell it just to buy you the option at the market. You don't care. right? You can do it that way too. So it's pretty slick with the Thinkorswim is able to do with those conditional orders. It's a good way to get around limitations where the market only takes limit orders and you can't be there to watch it. Same thing with the futures, the Bitcoin futures. You can do the same thing. Like right now, you see it's at 40.05. And let's say if it breaks 40.65, the high of the day, you believe it's going to run and it's going to run hard and you'd like to be involved. Well, this market moves in numbers of 5. So you can't, so you want to go in and let's say you want to buy it at 40.70. You could use the special order and say, okay, if the market hits 40.70, I want to go in and I want to buy it at whatever or bet work your limit to get involved. You can do that. So it's a way to, like, you're basically creating a synthetic stop, if you will. So that's a way you can do that for markets where you only take limits. It's a pretty slick thing to do, which is great because there are times you want to get involved, and that's the best way to do it. So I want to bring that to your attention. Now the obvious questions are going to be, well, how do you do it? Where's that at? Well, let me show you. Here you go. We'll just click on this. Right now the DXD is up. Okay. We're just going to go ahead and just click on the chart. Get the drop down menu and you see buy, sell, your customs. We're just going to click buy here for sake of argument. Okay. Now I already have my thing like programmed, so I'm going to go ahead and click edit. Okay. When you get to this screen, you want to go over to the far right. See this, I'm drawing a blank. Your options, all right? This right here is this little wheel. That's an options thing. So you want to come over here and click this options thing. Boom, like that. All right, now you have this screen that comes up. All right. So when this screen comes up, for instance, you see here, you tell it, what side do you want to buy something or do you want to sell, right? Tell it the quantity over here. If you want to buy a limit, whatever. All right. You can put your limit price in here. All right. And time and force. You have day. You have good till cancel. You have extended hours and good till cancel extended hours. Okay. Now here's the fun part. All down up in here is where you're going to create what you want it to do. All right. So you come down here. You click this. This is your conditions now. Here's the date that you're putting it in there as, and here's the time that you want it. And you can say cancel at such and such a time, or leave it the way you want. And you come down here, it's asking you what, type in your symbol. You put your symbol there. And here's the fun part, method. You want to do it on the bid, do it on the ask, do it at the mark to market. Or you can even do it off of a particular study, like moving average, Bollinger Band, whatever. And there's a whole bunch there. And here's your trigger point, such as greater than, equal to, greater than, all that good stuff. Then here's your threshold, meaning, because you're doing a limit. So you can put in how many ticks or whatever you want as your threshold. And you come over here and you click submit. It's just that simple. All right. Gives you a little description down here and explains things to you. And you're all set. You're done. All right. That's how you do it. All right. I will say the trade desk over at TD Ameritrade is by far the best trading desk I've ever had the experience of working with, outside of when I used to be an associated person working, doing my whole Wall Street thing. Of course, my trade desk was the best back then because I ran the trade desk, but the trade desk over at TD Ameritrade Thinkorswim is fabulous. They always hook me up whenever I call. Sometimes, you have to be on hold for a minute, but when you get somebody on the phone, at least you get someone who knows what they're talking about, or they can get you over to the right person that knows what they're talking about. So that's a good thing. All right. So TD Ameritrade Thinkorswim, excellent service in that regard, and allows you to trade extended hours and things of that nature. All right, so just wanted to point out a few things, few pointers, few little nuggets for getting ready for the new year in trading. All right, now let's talk about what's been happening with these markets that you don't really hear being talked about, uh, on the business channels. One of those things is the algorithms. Okay, at the end of the year, a lot of firms, they assess their performance with their certain um, algo box that they're using. They check those parameters, things of that nature, see what really worked, what didn't work. If there's any changes to the market dynamics, make the appropriate adjustments. You want to make sure you're using the correct algo set for the given markets that you will be trading. Not all markets move the same. Equities tend to move a little bit smoother than futures. Futures have a lot more volatility than the straight equities do, but don't get fooled. Equities can do amazing things as well. I've been doing this a long time. I've seen things do. I've seen some crazy things. So you just have to, put your big boy and girl pants on when you come into these markets. Now, as far as going back to the whole algo sets, we did have a few algo shifts last year. A couple of them even made the news, but most of the time when there's an algo shift, you're not going to hear about it. They don't really like to talk about it. The ones that are really obvious, they'll let you know, hey, there's something going on here. But other than that, they don't like to talk about it because it's a trade secret. Well, being that as it may, I looked at some of those things as well. And although the pulse waves were just dead on last year, I realized that with the current volatility situation, that the parameters, being that they are flexible the way they are, allowed me to take a look at a lot more of the intraday activity. A lot of day trade opportunities have been presenting themselves. And so I've noticed that the intraday price inflection points, a lot of those have been getting hit multiple times throughout a trading session. So what I did was I expanded the ranges on those. So you will begin to notice the entry column and the sell short column are going to be reflective of that. So you're going to see a lot of that. You're going to see times where you're buying on strength, and there'll be times where you're buying on weakness. Likewise, there'll be times you'll be selling on strength and selling on weakness. And I just made the algos just a little bit more sensitive to the inflows and outflows of large institutional money. All right, so giving you the opportunity, if you want to take a more aggressive approach and look at intraday opportunities. And for those of you who just like to, capture, major parts of the trends, you'll still be able to do that as well by just following primarily the TRS and the TR sup. The TR sup is the same as the sell stop. All right, it's analogous to the TRS, just on the support side. TRS is on your resistance side. TR support is on your support side. So you could just trade and monitor those, and use either the sell stop or the entry as your trailing stop if you enter the market on the TRS, and you'll be good to go. So let me show you what I mean by that, because that obviously is going to lead to another question. So let's take a look. Let's pull that up, and I can show you exactly what I'm talking about and how you can take advantage of that. Yeah, most of the changes, when they occur, you don't really notice them, and there'll be no reason for you to. All right, let's see. Okay, let's pop this open. Computer's acting a little slow right now. All right, you guys should be able to see this. Oh, I don't know if you caught this or not, but you see the pulse wave alerts legend. I updated that, and I don't know if I even told you guys, or I could have forgotten, but I updated this so you can use this to get an understanding of what's on the other side. All right. Excuse me. And there was something else. I'm trying to think. It'll come to me, but anyway, I'm gonna move on. All right, so let's go with the in-play tab because that's my favorite tab. You see this column here, column E, which is your TRS. That's the old TRS column right now. It's the sell short column now. All right. So here's where you'll be looking at your short entries. Of course, you look to go long at the entry point. Your sell stop is the new TR sup or TR support. You can take shorts just from this column alone, enter short here. If you want to capture, longer major trends in a downtrend, and you can use the TR sup, which is this 52-week column. This is your TRS right here, okay? This is TRS. You can come in and just enter on this if you just want to trade, within the longer term trends. So the market's in an uptrend, you'll just take these entry points. Excuse me. Likewise, if the market's in a downtrend, you would just take these entry points here. All right. So that's a way to be more, what's the word I'm looking for? Cautious when you enter the market. This would be more aggressive, coming in on the entry and the sell short side, as an example. All right. So taking a look at today, coming into today, we'll use gold for an example. You see today's entry point was here at the 1301 half. Didn't happen. Market got close, but didn't happen. Kind of pulled back, but not enough to trigger a short. So the market's kind of like an inside day right now. All right. Looking at like the NASDAQ futures here, the entry point was at 64.78. And you can see here, putting back the quote system. You can see here the NASDAQ hit 65.35 and has since pulled back some. So that was a nice run to catch if you were able to catch that. All right, so that's basically what that is. All right, so with that being said, people still talking about collapse and stuff ever since the market has been in a corrective state. And I just wanted to let you guys remember, there is no collapse. You saw the documentary I did. If you didn't, go back to my Algo Capitalist YouTube channel and take a look at the There Is No Collapse, and you'll be able to see as I walk you through all the different issues with that. All right, so that's there. I do believe that the current rally that we're seeing in the equity side is going to be setting up for the next leg down. And I think the next leg down is going to be extraordinary. So just be patient and just, follow the price triggers. So if you were coming into today's market and you saw those rally alerts, crash alerts, whatever, it takes anywhere from 3 to 5 bars for the market to figure that out. And those indicators do tend to lead the market. They're leading indicators. So they do lead price. And they can often change from day to day as well. What you're looking for is confirmation when you get those alerts. The confirmation will be within the price triggers themselves. Those intraday price inflection points, once those are triggered, that is your confirmation on the rally and crash alerts. All right. So even without the alerts, you would have the price triggers to lead the way. and I let you know, what we're doing and where we're going in a given market. All right, so I can't stress the price triggers enough, and I'm probably going to do another tutorial video just on that alone, using the current price triggers. So in tonight's price triggers, when I do the update, I'll probably go ahead and just put that on there for you so you can see and follow along some of those indicators. All right, so any questions? Let's take time for some questions. Any questions on any one of these markets that we cover? I take it everybody's well positioned. I'm still holding my my Russell. I'm still holding the inverse ETF Russell orders. Those are still working. And that's a perfect example of what we were talking about earlier. I did put the order in to get long the TWM, the inverse Russell, and it never triggered. It never triggered. It came within like a few pennies of triggering, but it never did. And that let me know that the current down leg was done because the Russell did not trigger. All right. So that's how I knew the reversal was in on that one. All right, we got a question. Okay, so if a rally alert doesn't play out that day, look at the TRS the next day to see if it will play out. Correct. That's correct. You could even look at it the present day as well. Because if, all right, let's use that example. Let's say on Apple, let's say there was a rally alert on Apple today, and instead Apple crashed. You would know that the rally alert obviously didn't play out if the market's dumping, but you'd also know if a sell was in play, because if the intraday price inflection points on those shorts is triggered, then you want to be involved on the short side of that market. That's just how that works. And so yeah, you're going to look for confirmation. You always want to look for confirmation on the price triggers. It could be TRS or it could be entry point for that matter. If you're looking at a rally alert, you just want to see confirmation on one of the price triggers. So if it's a rally alert, you want to see confirmation on the entry side or the TRS side. If it's a crash alert, then you want to see confirmation on the stop loss side or on the sell short trigger. That's how that works. That was a good question. Anybody else got any other questions? Hopefully I answered that to your liking. Any other questions? All right, so it sounds like everybody's good to go. That's what's up. All right, well, market will be closing in 15 minutes, so if you haven't had a chance to put some tickets in, you may want to do that. I'm going to start working on tonight's price triggers myself. No problem. You're welcome. All right, so we're all good. All right, well, I'll see everybody in the trading room then. This will do it for today's introduction. I don't even know what I would call it. I guess I'll call it something. All right, it's all good. See you guys in the trading room. Peace out.